Kwame's cousin, calling in from Atlanta, mentioned something else this time. I put some money into the S&P 500. Kwame back home in Kenya nodded like he understood, then texted a friend later. Wait, what is that? Is it a company, a country, a club I need an invitation to? Good question. And no, it's not a company and you don't need an invitation. Let's break it down. Think of the S&P 500 as a basket of fruit. Instead of betting your money on one single apple, one single company, you're buying a slice of 500 different fruits at once. If a few apples go bad, it barely matters. The basket as a whole still holds its value. More specifically, the S&P 500 is a list of 500 of the largest, most established companies in the United States. Names like Apple, Microsoft, and Coca-Cola all grouped together and tracked as one single number. So why does this number matter so much? 3 reasons. Reason 1, it's the scoreboard for the US stock market. When the news says the market went up today, they usually mean the S&P 500 went up. It's the quickest way to check the overall health of the biggest companies in America, all in one glance. Reason 2, it automatically spreads out your risk. Remember the fruit basket. If you invest in just one company and that company has a bad year, your money has a bad year too. But the S&P 500 holds 500 companies at once, across banks, tech, healthcare, retail, and more. One company stumbling doesn't sink the whole basket. Reason 3, history is on its side. Over many decades, the S&P 500 has trended upward even after wars, recessions, and crashes. That doesn't mean it never drops. It does, sometimes sharply. But long term, it has a track record of recovering and growing. Now here's the part every beginner asks. Can I actually buy the S&P 500 itself? Not exactly, but you can buy something that tracks it. It's called an index fund or an ETF. Think of it as a single ticket that gives you a small piece of all 500 companies at once, instead of buying each one separately. This is often where new investors start. Not because it's exciting, but because it's simple. You're not trying to guess which single company will win. You're investing in the overall growth of hundreds of companies together. Let's ask the same 10 questions from before, but now about the S&P 500 as a whole. Is it profitable overall? Historically, yes. Is it diversified? Extremely. Does it fit a long-term goal? Very often, yes. Many investors use it as a foundation, then add individual companies on top as they learn more. And remember, you don't need to answer every question perfectly before you start. The S&P 500 is often exactly where beginners begin, precisely because it doesn't require picking a winner. It just requires beginning. With the Wekeza app, you can research and invest in US stocks and funds that track the S&P 500, starting with a fraction of a share for as little as $10. Just $1 a month, $1 per trade, no big bank account required. Download Wekeza today, open your brokerage account, and start building your financial future, one smart question and one smart step at a time. Wekeza, learn, invest, connect, prosper. This video is for educational purposes only and is not investment advice. Investing involves risk, including the possible loss of your money. Past performance does not guarantee future results. Please do your own research or consult a licensed financial advisor before making any investment decision.